Per usual, living on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at another cloud principle using the TK lines as oscillators. As a reminder for the Ichimoku cloud, the settings I use for crypto, 2060, 12030, for legacy, 1852, 104, 26. For legacy, TradFi, those are default doubled. For crypto, they are default doubled and then slightly adjusted for 24/7 market. Use whatever settings you want, doesn't matter to me. I use the daily as my North Star. I also like the weekly, the 4-hour and the 8-hour occasionally as well, depending on the speed of the individual market. And for the cloud checklist, you always want congruent signals. You always want price above the cloud, bullish TK cross, lagging span, which I don't use, above the price, above the cloud. If you're looking for longs, if you're looking for shorts, it's the opposite. There are signals that I've talked about: Kumo breakout, TK cross, TK crisscross, edge to edge, and Kijun bounce. This TK discussion fits along the lines of the Kijun bounce criteria, but it sort of precedes the Kijun bounce. And it's just another part of the cloud system that instantly, once you recognize what you're looking at, you don't really need RSI, you don't really need MACD. If you're ever looking to quantify overbought or oversold, RSI I like. The RSI is great, MACD is fine, but also I'll show you some other indicators that you can use to quantify TK separation. Because the 20 and the 60 measure the Tenkin and the Kijun, they are both always measuring the 20 period and the 60 period mean. So if the 20 period mean exceeds the 60 period mean quickly, you will start to develop overbought or oversold signals. And let's take a look at when to look for that. What does it mean? If we look at the trend pendulum, at least in my head, this is how I'm always thinking about it, right? Are we bullish? Are we bearish? Are we neutral? Start there. Okay. We'll take a look at the Bitcoin cloud in a second, but Bitcoin cloud right now is neutral. A couple of weeks ago, March 12th was maybe the all-time high top. Coming into that date, we were getting more and more maximally bullish. Again, I'll take a look at this on the chart to show you what I mean. We were getting more and more maximally bullish, right? So the question is always, do I add, do I subtract? Do I add leverage? Do I add lots of leverage? Do I add size? So this type of exercise on any chart can just, again, this is what I'm doing. I'm looking at, is there a massive overbought or oversold signal? Is there something actionable here that says I need to be careful on the long side, I need to be careful on the short side, or I need to watch for overbought, oversold conditions, depending on what's going on, right? I'll look at NVIDIA, and it's best to just look at the extremes, look at what you're trading, look at what you like trading, and try to figure out, okay, what does this mean? Where did I mess up, right? Was I adding when there was a massive rising wedge with a bear div? Were the TK lines spread apart far as I was shorting, right? What was going on there? So the last time I talked about this was March 12th. I did this Kijun bounce video. Now it took a long time for price to move to the Kijun, but the difference between then and October, November, December was we were sort of riding this blue line, the Tenkin, the entire time, whereas in February into March, again on the daily, that's important. It's always on the daily for this specific exercise, for Bitcoin anyway. We were far above that blue line, far above the red line, and the red and blue line, the TK lines there, were spread apart pretty wide. So just subjectively, we were obviously moving faster in February and March than we were in the previous quarter. And at some point, the probabilities just are not in your favor for additional price appreciation, right? And that's where trying to figure out, okay, where is the mean? How far away is the mean from price? And what should I be doing at this time, right? We were talking about a high time frame rising wedge. And it certainly stopped me from adding or going long again or doing whatever up there. It doesn't necessarily mean close anything on the long side always, right? But it's telling you, be careful, right? Again, this is all about what is the trend? What is the strength of the trend? Where are we at in the trend? If you can get better at identifying when you're getting close to maximally bullish or maximally bearish, you will start to get more comfortable opening positions, adding to positions, subtracting from positions, trading with size. Otherwise, you're kind of just guessing. At least that's how I feel when I'm not using the cloud. And if you're unfamiliar with mean reversion, it's just this idea that eventually we come back to an average level, either a historic level or a level that's been established over a longer time period. So the mean can catch up with price, or price can catch up with the mean, a little bit of both, as we had on the BTC side. Before I go any further here, let me talk about today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. One such chart that is quite challenged right now on the oversold side would be something like ETH-BTC. Something like ETH-BTC is clearly bearish on the cloud, has been bearish for quite some time, worked its way through the cloud. If we look at these TK lines, they are obviously bearish. They're spread apart decently wide, but just as a quick spot check, I'll show you how to measure this in a second, but as a quick spot check, we're certainly wider here on the TK distribution than we are now. So part of this is sort of understanding what are the market norms, what have been the market norms in bullish periods and bearish periods. How bearish can we get? How bullish can we get? If we look at the 2018-2019 period for ETH-BTC, we can get much more bearish quicker than we are here. You know, this is peanuts compared to the distance, the spread in 2018 and 2019. Now, this isn't 2018 and 2019, but it isn't telling me, you know, this is unlikely to go lower. It's just saying, look, this may be oversold based off of the distance to the 60 period mean, the Kijun, but this can definitely get more oversold. And it's less oversold now than it was overbought in 2021. Another great example on the Kijun bounce side is something like DOGE, where on the DOGE BTC chart on the weekly, you can see how we sort of drifted below the Tenkin and drifted back towards the Tenkin, and then eventually we had a Kijun retracement, a full mean reversion, and then we resumed bearishness. We got pretty oversold even relative to the Tenkin, and then mean reverted, and now we're trying to figure out what we're going to do. But identifying, you know, where are we relative to the TK lines in some high time frame is extremely useful. Not that everyone is shorting altcoins or anything, but on a relative basis is certainly useful to identify what might be happening on a time frame. Another thing with alts, you know, if we look at ADA, BTC, these can get fairly oversold on the bear. So even ADA, right? This is as bearish as it's been based on the means of the 20 and 60 periods previously, as bearish as it's been almost the entire time. You know, we can look at least on the daily, we can scroll back here, just quick visually, just checking, eyeballing this, right? You know, it's in the wheelhouse of 2021 and 2022, certainly in the wheelhouse of 2019 there. And if we go to the weekly, I'm sure it is very, very far away from the Kijun there. So all this is saying is, look, yes, this is bearish, but don't expect continuation on the pendulum, right? If we go back to the pendulum, you know, where are we on the bearish pendulum of ADA, BTC? Probably somewhere close to maximally oversold. Now, that doesn't mean you're going to see a crazy bounce, but it means you're probably likely going to see sideways or mean catch up with price, right? So once the mean catches up with price, again, you got a Kijun bounce here to the downside. Once Kijun catches up with price, then you're likely to see continuation, at least more so than you are now. This is just, again, a game of probabilities. What are the probabilities telling you here? Alts look very oversold, but that's how they tend to look historically over time in bearish periods, right? All right, so if we go to the daily Bitcoin cloud, you can see where we've had periods of overbought here. We've had periods of more and less overbought in the past couple of quarters. One other thing the Kijun is always identifying is the mean reversion level, the ultimate mean reversion level on the daily. And if the mean reversion level is unchanged, if it's flat for an extended period of time, then that's the cloud identifying a momentumless range, and that's when you should always look for consolidation. It's no surprise that we had various chart patterns here as this was consolidating, as we got this TK separation over and over and over again in 2023. Markets love a slow grind. They love what happened in November through January. You know, this is what you want to see. You always want to see this slow drift, higher, higher, higher on the daily, or lower, lower, lower. What tends to get people to close positions or come to a decision-making process is some quick action, some quick movement, right? So when you get bursts of quick action, you tend to see more profit taking on one side of the book or the other, and then you just need more buyers and sellers to come in and continue the momentum, right? And like I said, in the open, we're in the middle of the cloud here, so there's not really much to say. We're pretty neutral as neutral gets, right? This could go anywhere inside of the cloud. But as far as identifying future overbought or oversold conditions, using this price versus Kijun indicator is a good one. You can just search it, literally price versus Kijun equilibrium index is what it's called, okay? So once you have it on your chart, you can change how it looks a little bit, which I've done here to make it just easier to see. It's already default on a crypto doubled setting, so that's perfect. One thing I also did here, just as a comparison, is looked at the 28 period RSI, which is a doubled RSI. So if we go back in time on this, back to, what was this, March 14th. Okay, I made that video March 12th when I started to see that things looked pretty long in the tooth, right? You kind of either get three variations. You either get, these quick bursts that go flat, slow continuous movement, or fast burst, right? So you always have this option of, do I do anything at all? Do I close everything? Do I close something? Do I stop adding, right? A lot of people, if we think about AMC or GME right now, they sort of get here because of media coverage and because of word of mouth, whatever other reason. They kind of get to the market late. Retail, Main Street, dumb money, they like to FOMO. They're not here before momentum is here, right? So this is where you get a lot of activity and then people lose money. So your goal here is to not be like one of those people. Your goal here is to identify the likelihood of a mean reversion based on distance from Kijun, for example. Are we overbought? Are we oversold? Is there a divergence here? Is anything going on? We can also look at the historic differences on the daily here of the price versus Kijun indicator on the bottom. And you can sort of see where the market has tolerated maximally overbought and maximally oversold. And again, this is subjective. It's a probability thing. At that time, we were almost 30% above the Kijun. And historically, we are an outlier there. Even in the bull market period of 2017, we frequently came back on that mean reversion. This was the most overbought we had been since 2021. So I certainly am not adding to positions up there when it looks like that. And I'm being very cautious on anything. You can also use the Williams fractals. That's certainly a different discussion for a different video, but along with what's going on and everything else, we can watch for the eventual breach of the fractal. We had the early warning with the TK disequilibrium, price way above the mean reversion points. Then we have a Williams fractal trailing stop loss, get kicked. So all of this is screaming at you. We have reached this part of the pendulum, okay? That was maximally overbought, maximally bullish at that very moment. Now, you don't know this is going to collapse to 55K or 59, whatever we came to, but that's not the point. The point is looking for these early warning signs and doing your best to be on the right side of the pendulum. And, eventually we fully mean reverted and then some. And you can definitely look at other examples of this. Something I bring up pretty frequently. Just spot check, right? Where did the TK separation happen the most? Was that at the beginning or the end of the trend? Where was XYZ relative to the current local high or the all-time high? If we look at just, this is the crypto cloud and the crypto settings, but same concept. The all-time high was a day after we were maximally overbought from the Kijun on a relative basis, and that was 33%. Again, if you just scroll back, look historically, what is tolerated, 33% is amongst the most maximally overbought you tend to see NVIDIA on the daily, okay, on these settings. The difference between then and now at this price is we have come back to 915 and we have reset the means. The means are now higher, the means are now closer to price, and we are potentially setting up for something like this on NVIDIA, which would be a inverted head and shoulders chart pattern, bullish continuation. Now, you don't know that that's going to happen at 9:15 on March 8th, but it's definitely an early warning sign telling you, hey, be careful. I mean, we can go to another example. We'll go to ETH. If we go to ETH on the daily, price versus Kijun, again, the difference between this being minimally overbought relative to this, right? the rate of change clearly had the afterburners on in February into March. And of course, you got people saying, okay, we're going to 10K. ETH is going to beat BTC to all-time highs or whatever they were talking about, right? None of that happened. And you get calls for that at the top, right? You get calls for that when we are just screaming on momentum. Again, 30% above Kijun. If we look historically, we last saw that in August 2022, 2021, and a few times in 2020. But it's quite the rarity to see ETH that far away from the Kijun. And that's, again, important because you don't want to be buying in the wrong end of the trend. Where are we in the pendulum, right? Just ask yourself that every time you're buying. Where are we in the pendulum? What is the cloud trying to tell me? That's why I'm always talking about the bullish TK crisscrosses. I'm always talking about failed bearish patterns, failed bearish continuations, failed bearish breakdowns. Now here, looking at ETH today, right, this is a completely different story. This has gone from neutral to bearish, bearish on the cloud. So we've gone from maximally bullish on the pendulum to neutral to now freshly bearish. So on trend, based on trend, I'm certainly not a buyer here. And this has a long ways to go, potentially before reversal, potentially before being oversold. CPI, volatility event, news event, whatever can disrupt that. But 2,900 today looks a lot different than 2,900 in February. This is, of course, easier to look at in retrospect, but that's why it's important to know, okay, right, like when charts look like this, when we are just at a 45-degree angle, you got to be careful. You got to be very careful. That's when you see the most expansive upside targets. That's when you see calls for ridiculousness. Okay. Is that possible? Sure. Is it probable? Usually not. So that's all I have for this one today. Like, dislike, comment, share, subscribe, and happy trading.